Imagine a time where cars are more than just tools. Imagine a world of invention where electric power is a whisper on the roadways and cars become wonderful works of art. This is the world that Tesla is building. Even while the company is now leading the electric vehicle market, its objectives are far more broad. Tesla is developing brain computer interface, solar power systems, and possibly even self driving cars. In this video, we'll examine Tesla's unrealized potential. We'll discuss the company's plans for the future as well as its cutting edge technologies. We'll also respond to the following question: is Tesla just now starting to reach its full potential? So buckle up and let's take a voyage into the future of transportation. Kindly don't forget to click the subscribe and like buttons. Let's begin by introducing ourselves and welcome to Tesla Stock News. As everyone knows, Tesla is much more than just a manufacturer of cars. This isn't your average automaker, despite what the media often says. Tesla is the designer of innovation. Consider this. In addition to building cars, they also compose more than 80% of their parts internally, producing a harmonious blend of art and craft. From the raw components to the final assembly line, they are the trailblazers and leaders of quality at every level. But here's the twist. Aboard the supplier train, they are more than just clients. Nope, they're in the mines and actively working to remove lithium, which is necessary for their batteries. This self-sufficiency gives their energy fantasies a tiny bit of independence and reduces their reliance on outside sources. What goes into the design of batteries? Check, confirm, and confirm again. Rather than just seeing batteries, Tesla actually makes them by bursting them into existence. In the realm of electric vehicles, they are unmatched due to this level of control. Think about energy density, range, and Tesla being the leader. Now let's move into the autonomous lane. Tesla is not just treading water in the AI space, but diving in headfirst. They are the pioneers of completely autonomous cars as well as robotics. They imagine a future in which people would be confined to the sidelines while cars move. The startling admission is finally here. Tesla is more than just a vehicle or tech business. Make sure you buckle up. They are masters of chips as well. Their autos and autonomous systems run on the potent D1 AI microprocessor that they developed. It's more than simply a car, it's a thinking, learning machine. Now, everyone, let's step outside the garage. Not content to ride four wheels, Tesla is soaring through the solar heavens. By putting solar panels on homes and businesses, they are giving the Earth a more sustainable shade of green. Now let's talk about energy storage. Tesla doesn't just use electricity, it also gathers it. They sell back to the grid the excess energy they store ingest. It's comparable to generating revenue from solar energy and making renewable energy sources lucrative ventures. With charging stations all around the globe, Tesla has everything covered. You can always find a place to plug in and indulge your electric dreams. Concern over the range? Not near Tesla's residence. Still, there's more. Tesla is not just a hardware expert, but also a software expert. They are opening the gates and licensing their whole self-driving software, letting the world in on their autonomous secrets. Is there anyone out there that wants to buy insurance? Tesla is producing insurance that matches the uniqueness of their vehicles. It is not merely protection, it is a shield designed exclusively for Tesla. Are you a little perplexed? Tesla resides in the clouds as well. They are exploring cloud storage options as they venture into the digital gap. The computer powerhouse is not to be disregarded. Tesla, with the sixth most powerful supercomputer in the world, is an expert at creating artificial intelligence and conquering difficult simulations. And naturally, say hello to the Tesla bot. Their profound understanding of robotics extends far beyond the road, indicating a future in which Tesla's technology will be diverse. Tesla is the heavyweight champion of the electric car sector and is no longer a downer. Their range of technologically advanced items proves their undeniable leadership. Whether it ran solely on electricity, gasoline, or hybrid fuel, the Tesla Model Y emerged as the most well-liked vehicle globally in 2023. The story of Tesla, though, is far from over. For the next 5 years, hold on to those charging cables. Make yourself comfy. Technology is sending the automotive and energy sectors on a technological roller coaster. Rather than being a one-trick pony, Tesla's portfolio is a work of art, a symphony of change, and a roadmap for a future in which renewable energy, autonomous vehicles, and endless innovation are the norm. Recent investor correspondence from Barron Partners Fund, dated Q2 2023, disclosed that the fund is keeping a careful eye on Tesla Incorporated. The investment management company Barron Funds disclosed some tasty information in its most recent investor letter. Now let's talk about the fund's performance. The real showstopper, their remarkable 15.54% return in the second quarter of 2023, which was much over their expectations, suggests that they appear to be dancing to a new tune. By contrast, during the same time period, the Russell Midcap Growth Index managed 8.74% and the S&P 500 Index managed just 6.23%. Still, there's more. This fund has increased by an amazing 42.59% so far this year, demonstrating extraordinary returns. It's not just a one-time lucky charm. In the meanwhile, the indexes are trailing at 15.94% and 16.89%, respectively. If you're curious how they manage their money so miraculously, take a look at their top 5 holdings to uncover their outstanding choices for 2023. Now let's concentrate on Tesla Incorporated, the exhibition's star attraction. This is no ordinary automaker, this tech behemoth. Its headquarters are located in the sun-drenched metropolis of Austin, Texas, and its primary concentration is on creating, developing, manufacturing, and selling fully electric automobiles. It's all about what lies ahead, but that's not all. They are also experimenting with energy production and storage technologies. As of September 1st, 2023, Tesla Incorporated was trading flat at $245.01 per share. Yet, over the previous month, Tesla Incorporated had a negative 2.56% return, which was something of a moonwalk. The preceding year saw a little decrease in the value of its shares, which lost 99.33% of their worth. However, do not be duped by these irregularities on the radar. Even with its staggering $777.659 billion market value, Tesla Incorporated remains a significant participant. Their highly disruptive growth position and impressive performance during this period were influenced by a number of factors. There is a noticeable improvement in investor sentiment for Tesla Incorporated. The problems that Tesla faced in 2022 are now behind it, and its finances are still sound. Recent advancements give the giant in electric vehicles hope, even though their margins have considerably declined from their peak performance. Among the notable achievements is Tesla's successful entry into the Chinese market, where deliveries are remarkably rebounding. Furthermore, Tesla's most recent manufacturing facility in Texas has seen a surge in production, which is expected to positively impact domestic sales and profit margins. Alongside these advancements, regulations enacted by the U.S. government have contributed to a decrease in the public's cost of Tesla cars, as well as the company's battery manufacturer. Analysts and experts in the market are starting to believe that Tesla is still far from reaching its full potential. Among these adjustments, Tesla's quarter-long strategic partnerships with competing businesses are significant. When Tesla decided to grant Ford Motors access to its cutting-edge network and electric vehicle charging capabilities, the company achieved a major milestone early in June. Quickly after, other traditional automakers and manufacturers of all EV vehicles, like General Motors, Rivian, and Volvo, did the same. This cooperative trend is expected to continue, highlighting once more how superior Tesla's infrastructure and charging technology are in comparison to other industry norms. It may be possible to accelerate the construction of EV charging infrastructure, assuage concerns about obsolescence, and reduce resistance among prospective EV buyers by consolidating around a single technology. Tesla is undoubtedly leading the way in the fast-expanding global adoption of electric vehicles, holding an incredible 60% market share in the domestic EV business. This demonstrates Tesla's significance to the sector and positions it as the primary beneficiary of the continuous transition to electric vehicles. In addition to electric cars, companies that can leverage AI in the investment space are becoming more and more popular. The companies that made AI possible, semiconductors, and software, were first the center of attention. However, investors soon saw that companies that could employ AI well could be able to reap even greater benefits. In this regard, Tesla has set the standard by delivering its driverless hardware in 2016 and keeping up its software development. Artificial intelligence plays a major role in Tesla's autonomous driving technology, which allows its cars to assess their surroundings and make decisions quickly. Tesla has become a leader in the industry by successfully combining state-of-the-art computer hardware with inferential software and proprietary AI training. It is expected that Tesla would at some point market its autonomous vehicle service to other automakers. While Tesla has obviously done incredibly well, during the quarter, there was also significant growth in a core growth firm and another top 10 position, both of which exceeded Tesla in terms of appreciation. With an incredible growth of 29.3% over the last 3 months, Coster Group Incorporated is among the top performers. This spike is the result of CoStar's purposeful push into the home data market, where results have surpassed expectations. Unexpectedly, CoStar's monthly residential user base has surpassed internal projections, and this achievement occurred before the company ramped up its marketing initiatives. As of right now, it is evident that the residential prospect may be explored for less money and is significantly more significant than initially believed. This diversification initiative, albeit admirable, has not been without its challenges. The macroeconomic environment was a major factor in the decline that CoStar's legacy commercial sector experienced.